We started investing the Evenlode Global Income Fund in November 2017. My co-manager Chris Elliott and I have been enjoying talking to our co-investors about our high-quality portfolio, and we're looking forward to managing it as we go forward into 2018. Our positioning reflects the valuations and dividends that are on offer in the global marketplace. Around a third of the portfolio is invested in consumer goods, and a little under a fifth in healthcare companies, including pharmaceuticals, medical devices and services. A further fifth is invested in technology companies, hardware and software, and another fifth in services companies, including the media sector. The balance is made up of excellent industrial firms. Overall, our estimates indicate that global equity markets are somewhat overvalued, and our positioning is towards better free cash flow and dividend yields. To generalise, we see fewer opportunities in high-quality European businesses and certain technology names whose great competitive positions and stable cash flows have been more than fully recognised by the market. However, we see plenty of businesses trading at or below our estimates of fair value. It is important not to tar all businesses with the same brush when thinking about individual firms and the potential returns they offer to investors. Intuit might be expensive, but Microsoft might not be. Also, recent movements can spur questions over sector valuations. To take the largest sector in the portfolio as an example, consumer goods businesses have had a good run over the last year or two. The important question to ask is what the share price now implies about future returns. Some businesses do look expensive, but others, like our two largest holdings, PepsiCo and Diageo, look cheap. At Evenlode, we are fundamentally investors in businesses and let our assessment of their characteristics drive our decision making. We are, however, clearly aware of the macroeconomic environment, and the geopolitical risks can be seen in the headlines, whether it's Brexit and European stability, US domestic and foreign policy, North Korea, or what might happen to interest rates. The Evenlode approach to these issues is not to ignore them, but to insulate our portfolios as much as possible by looking for businesses with strong competitive positions, good balance sheets, and high levels of free cash flow. In that sense, we take a Rumsfeldian unknown unknowns approach to selecting companies and look for businesses that can make the most of the opportunities, but also see through any tougher times that might come along in 2018 and beyond.